California real estate is changing right underneath people's feet right now, and whether you agree with these laws or not, if you own property in San Diego, you need to understand what's happening. I'm Jennifer St. Clair, and you're watching Living in San Diego, where we talk not just about the beautiful parts of San Diego, which we love, but also the policies, the costs, and the changes shaping what it's becoming. So a couple of months ago, I did a video on laws affecting San Diego homeowners, and you guys absolutely lit the comment section up. And honestly, since then, things have only gotten a little more intense. California is moving incredibly fast right now when it comes to housing policy, taxes, insurance, density, and affordability. And some people think these changes are necessary. Other people think California is becoming almost impossible to navigate financially. And some of these policies are affecting homeowners in ways I honestly don't think many people fully understand yet. But either way, if you own a home here, plan to buy here, inherit a home, or invest in property here, these things matter. So today in this video, I'm going to break down 5 more laws and policy shifts that are quietly reshaping San Diego real estate right now, and more importantly, what they actually mean for you in the real world. So law number 1 is Measure A, or the empty homes tax. And this first one is the most urgent and controversial because we are literally weeks away from the June 2nd election. Measure A, formerly called the empty homes tax, is on your ballot right now. If you own a home in San Diego that isn't your primary residence and it sits empty for more than half the year, you're looking at a new tax bill of about $8,000 starting next year. By 2028, that goes up to $10,000 a year, and if that home is held in a corporate entity, you could add another $5K on top of that. The city is counting on this to bring in up to $20 million, but here is the Living in San Diego reality check. That money goes into the general fund. It's not legally earmarked for housing. It's a revenue play, and it's going to hit our coastal communities the hardest. And this is no longer just some idea floating around Sacramento. This is actually a ballot measure people will be voting on June 2nd, 2026. So the supporters argued we have a housing shortage. Why should multi-million-dollar homes sit empty while people struggle to find housing? Opponents argue you already paid for the property. You already paid for property taxes. Why should the government now penalize you for how often you use your own home? And honestly, this debate gets emotional very quickly, especially in coastal San Diego, because places like La Jolla, Coronado, Del Mar, Point Loma, and downtown have large numbers of second homes, seasonal residents, retirees, and vacation properties. Personally, I think people should absolutely have a right to own a second home without being punished for it. That's just my take. But supporters believe this could free up inventory and generate additional city revenue. I don't know, what do you think? What's also interesting is that opponents are already challenging the legality of the measure, pointing to San Francisco's version of a vacant home tax that was struck down in court over constitutional concerns. So this may ultimately become both a housing battle and a legal battle. But regardless of where people stand politically, I think this signals something bigger. California and San Diego are becoming increasingly aggressive about housing regulation and revenue generation. I think they personally should just balance their budget, but that's just me. I don't know. Call me crazy. I don't know. Households are required to do that. Shouldn't states be required to do that? I'm sorry. I digress. Let's go back. Okay, let's move on to law number 2. Prop 19. Now, this one isn't brand new, but the impact of it is really being felt, and it may actually be the most emotional topic of this entire video, because families are now starting to experience the real world consequences of Prop 19 that was passed a couple years ago. So for decades in California, families could often inherit property and keep the older property tax base through parent-child transfers. Then Prop 19 changed the rules. And now, in many situations, inherited properties are reassessed much closer to current market value unless extremely specific requirements are met. And this becomes extremely painful in coastal California. Imagine your parents bought a beautiful beach house decades ago for $180,000, and now it's worth $2.5 million. A lot of families assumed they'd simply inherit the property and continue paying the taxes based upon the old assessed value. But under Prop 19, if the child does not move into the inherited home as their primary residence within 1 year, the property can be reassessed to current market value. And vacation homes, rental properties, and investment properties generally receive zero protection at all. There's technically still an exclusion gap, currently roughly about 1.1 million above the parent's assessed value. But on many coastal San Diego properties, that protection becomes almost meaningless because values have risen so dramatically. Families have reported property tax bills jumping from $1,300 a year to $18,000 after a parent passed away. And many are being forced to sell homes that have been in their family for decades. So this issue gets complicated because there are actually two sides to why people even supported Prop 19. Some Californians believed permanently inherited lower tax bases kind of distorted the market and shifted the tax burdens unfairly to new buyers that were entering California. Because let's back up. Primary owners for decades since the 70s have been protected by Prop 13, which is a cap of 2% per year increase on your property taxes. And for good reason. That's kept many people in their homes for decades and decades. They would have been priced out by the increasing value, increasing their taxes. So now we're actually watching the real world collision between those two ideas. You're seeing inherited family homes that are being sold, family properties leaving generations of ownership going back into the market. And honestly, as somebody who's watched California real estate for years, this one kind of feels really deeply personal for a lot of families. There's growing frustration from people who feel they didn't fully understand the long-term consequences when the proposition was proposed and passed. They don't explain these laws well. And there's even now another movement attempting to partially repeal portions of Prop 19 again, because this debate is nowhere near over. Two previous repeal attempts failed in 2022 and 2024 to gather enough signatures, and whether this third effort qualifies for the November 2026 ballot is still uncertain as of this filming. But it tells you pretty much everything about how much frustration this law has created in San Diego and California. All right, law number 3, California's insurance crisis. This may quietly be one of the biggest threats facing California real estate right now. Insurance, because today in California, you can qualify for the mortgage and still lose the home because you can't get insurance. And this is becoming a huge issue in parts of San Diego. Can you say wildfires? Especially canyon properties, hillside homes, older homes, high fire risk areas, and homes near brush zones. We're seeing more insurers either pull out completely, dramatically raise rates, or refuse to write new policies in certain areas altogether. And when that happens, many homeowners end up pushed into the California FAIR plan, which often comes with higher costs and more limited coverage. This is becoming a massive affordability issue that many buyers still don't fully understand when they start shopping homes, because people focus on the mortgage payment, the interest rate, and taxes, and then suddenly the insurance quote comes back thousands and thousands of dollars higher than expected. So California regulators are now trying to pressure insurers to continue writing policies in high-risk areas while also allowing companies to use newer catastrophe modeling systems to justify rates. Even with the 2025 regulatory changes intended to lure insurers back, many San Diegans are still seeing premiums double or triple because the state is trying to balance consumer protection, insurance company solvency, wildfire risk, and housing affordability all at the same time. And honestly, I don't think enough people are talking about how much insurance is affecting property values in California right now. Because if homes become difficult or impossible to insure, eventually that affects demand. It means only cash buyers that don't need insurance can purchase them. Let me just give you a quick example. I was talking to an agent a few months ago, and she said, I have to sell my house because my insurance went from $2,500 a year to $11,000 or $15,000 a year. And she had decided to liquidate her property and said that she was going to have to deeply discount the cost of that property, the sales price, because of the increased insurance costs. Well, first of all, I had proposed to her that perhaps she could just pay the insurance in advance for the people instead of deeply discounting $100,000. 3 years of insurance is $33,000. And many people only stay in their homes 3 to 5 years. So that's really a good option to offer, to have the seller pay for insurance the amount that you think it's going to be. Obviously, we can't guarantee future insurance increases, but it makes it easier to bring a buyer in if their hold timeline is 3 to 5 years. And that was a solution for her, but that's just an example. I told the story also of an agent in California, or not in California, in Georgia, who bought a house, got a binder, and a month later they increased her insurance costs and it got canceled. So please be careful. I don't say this to scare people off. It's just increased due diligence when you do purchase in California. And make sure you take a look at those things that might affect the house's insurability in the future. Okay, moving on. Law number 4 is the state versus city's builder's remedy. What does that mean? The state is no longer asking cities nicely to build housing, and one of the biggest mechanisms behind that is something called the Builder's Remedy 2.0. In the past, cities could tie up a project in environmental reviews for years. Now, if a project meets certain affordability criteria, the state mandates a streamlined approval. You can see the results of this in the massive density shifts in places like Mission Valley and Midway District, which I've talked about in previous videos. Whether you like the new skyline or not, the power has shifted from the City Hall to Sacramento. This is tied to California's housing elements laws, which require cities to plan for aggressive housing growth targets set by the state, not cities. And when cities fail to stay compliant, developers can sometimes bypass portions of local zoning laws or zoning restrictions entirely. That's a huge shift, because what the Builder's Remedy means in practice is that developers can propose projects that don't conform to local zoning, and cities have very limited ability to say no. Because for decades, local governments had much more power to slow, reshape, or block development projects. Now the state is increasingly overriding local resistance in the name of solving California's housing shortage. I disagree a little bit about whether we actually even have a housing shortage. I'll save that for another video. However, I do not agree that Sacramento should be able to impose California standards on cities everywhere. That does not make sense. I think local ordinances, that's overreach of regulation, in my opinion. I don't know. What do you guys think? So whether people agree with that or not, you can physically see it happening all across San Diego. Mission Valley, Midway, transit corridors, mixed-use projects, redevelopment zones. This isn't theoretical anymore. Supporters argue California desperately needs more housing supply. Critics argue infrastructure, traffic, parking, schools, water systems, neighborhood planning, they're all not keeping pace with the speed of development. I'm one of those people. That's how I feel. And honestly, this tension between Sacramento and local communities is becoming one of the defining political fights in California real estate. Law number 5, SB 743, vehicle miles traveled, fees. This one sounds boring at first until you realize how much it may affect housing costs. California has increasingly shifted toward policies designed to discourage suburban sprawl and encourage dense infill development closer to job centers and transit. We all know that. And under the state's VMT requirements, or vehicle miles traveled, specifically SB 743, developers building in more car-dependent areas may now face additional transportation mitigation costs and fees. Critics, including the San Diego Building Industry Association, say these fees could add up to $16,000 per unit in construction costs. One coalition estimated the cumulative impact at up to $325,000 per unit over 20 years. Those numbers are disputed by some supporters, but they're still on the record. You can go read them. Meanwhile, supporters argue California cannot keep expanding outward forever and needs to reduce traffic congestion, emissions, and infrastructure strain. And honestly, this is where California's housing crisis becomes incredibly complicated, because now you have this collision between affordability, environmental policy, infrastructure, traffic, construction costs, and density pressure. And it's all happening at the same time. And the reality is the laws changed faster than the economics. That was a lot. The rules keep changing. The costs keep changing. Insurance changes, taxes change, development rules change. And for a lot of people, it feels harder than ever to predict what California is even going to look like 10 years from now. Heck, 2 years from now. Some people see these changes as necessary evolution. Other people see them as a slow unraveling of the California that they grew up in. And if you own property here, plan to buy property here, hope to inherit a home here, or even just hope to stay here long term, understanding these policies matters more than ever, because these are no longer abstract political conversations. These changes are directly impacting affordability, insurance, taxes, development, and the future character of San Diego neighborhoods. And honestly, I think many Californians still don't fully realize how dramatically the rules underneath real estate ownership are changing right now. That brings us to our question of the day. Which of these laws do you think will have the biggest impact on California over the next 10 years? Is it the insurance, Prop 19, density laws, empty home taxes? I genuinely want to hear where you stand on this. And if you are thinking about relocating to, in, and around San Diego, reach out to me directly. My team and I help people navigate these exact conversations every single day. Don't wait till last minute. Contact me now if you plan on relocating in the future, or if you're planning on leaving the state, moving toward family, you've had enough of San Diego. Certainly a lot of people do make that choice. And I get a lot of people that move back and a lot of people that love where they go. But reach out, let's have a conversation before you do that, because that's a move that you can't undo. And if there's another California law or policy you want me to break down in a future video, drop it in the comments below. All right, that's enough California chaos and housing drama for one day. Thank you for staying till the end. I really appreciate you supporting my channel. If you like this video, you might like this one over here or this one over here. Please hit the like button, comment below. We've got a notification bell over here. And as always, I love each and every one of you. Stay sunny, San Diego.